Ladies and gentlemen, in a world where economic trends and cryptocurrencies intertwine, it's essential to grasp the intricacies of the financial landscape to protect ourselves from potential harmful implications. Today, we embark on a journey to explore the current economic situation, paying particular attention to the world of cryptocurrencies like Bitcoin and the timeless allure of gold. Why is gold consolidating, and what are the probabilities of it pushing up? Gold, often regarded as a safe haven asset, is in a consolidation phase. The probabilities indicate that it might push up, but before we get too optimistic, there's a chance of a minor pullback. What's crucial is monitoring key support levels around 1900 and 1880. The price of gold can provide valuable insights into the overall economic sentiment and act as a hedge against uncertainties. Now, let's turn our attention to Bitcoin, the poster child of cryptocurrencies. Bitcoin seems to be following a similar trend to gold, albeit slightly earlier in the cycle. There's a short position in play, with expectations of further pullback before a potential upward move. The volatility of Bitcoin, like gold, makes it a fascinating asset to watch and invest in, but it also comes with its share of risks. Why do CME gaps in the Bitcoin futures market matter? These gaps emerge when there's a significant difference between Bitcoin's closing and opening prices over the weekend. They tend to get filled over time as Bitcoin's price reverts to the gap level. This phenomenon is driven by market sentiment, historical patterns, and the whims of Bitcoin itself. It's like a unique game of predicting the weather, challenging yet fascinating. Now, let's delve into the words of Peter Schiff, a well-known figure in the world of finance. He's not impressed by Bitcoin's rally and predicts that once the SEC gives the green light to a spot ETF for Bitcoin, the party could be over. He even foresees a sell-off before the SEC's approval. But here's the catch: even if the approval is denied, it might not be all bad for Bitcoin. Some individuals might still hold on to their Bitcoin hopes despite unfavorable news. It's like a high-stakes poker game, with the SEC holding the cards. Speaking of high stakes, there's a cautionary tale about investors who fell for a Bitcoin scheme promising incredible profits every 2 weeks. In the end, this scheme pulled the plug and disappeared, leaving investors in the lurch. It's a stark reminder that easy money often leads to heavy losses. If it sounds too good to be true, it probably is. Cryptocurrency markets are rife with opportunities, but they are also teeming with risks, making due diligence paramount. Let's pivot to the world of Bitcoin and its intriguing parallels with gold. Bitcoin, this digital wonder, was created in 2008 and released to the world in 2009. It shares some similarities with gold, notably its finite supply. However, it takes time to mine all the Bitcoin. Every 4 years, the rewards for miners halve, making it harder and slower to obtain new Bitcoins. This means Bitcoin will increasingly rely on transaction fees to keep miners interested. It's like a marathon, and the finish line is still a long way off. In the world of cryptocurrencies, one thing is certain: it's a roller coaster. So, always buckle up and prepare for the ride. Now, let's shift our focus to key economic data. Core PCE, a favored inflation indicator for the Federal Reserve, has come in at 3%, aligning with forecasts. But what really caught our attention is personal spending. It jumped dramatically, surpassing expectations by going from a projected 5% increase to 7%. This tells us that people are either willing or forced to spend, but here's the catch: credit card debt is skyrocketing, and defaults are increasing. This implies that consumers are still spending, but they're relying heavily on debt. The disparity between personal spending and personal income is growing, and it's not a favorable sign for the economy. On the contrary, the Federal Reserve might see it as a way to eventually bring down inflation. Understanding these economic nuances and their implications empowers us on our financial journey. It allows us to navigate the tumultuous waters of the financial world, making informed decisions and guarding against potential pitfalls. In the world of cryptocurrency and traditional assets like gold, knowledge is power. But let's not stop there. The S&P 500, a barometer of the stock market's health, is showing signs of a bounce. After a challenging day, the S&P is on the rise, and this could be a significant turning point. We had previously identified the 412 level on the SPY as a pivotal point, and indeed, it has provided a technical bounce. For traders and investors, understanding these key support and resistance levels is of utmost importance. It's all about playing the probabilities, applying discipline, and leaving emotions at the door. And what about Mark Cuban, the billionaire investor and owner of the Dallas Mavericks? He believes that cryptocurrency is still waiting for its Instagram moment. This means that crypto lacks that one application or use case that would make it irresistible to the masses, just as Instagram revolutionized photo sharing. It's a thought-provoking perspective that hints at the untapped potential of cryptocurrencies. Lastly, there's the matter of the SEC's demand for Ripple to pay a $770 million penalty. This indicates the SEC's frustration after several legal battles lost against the crypto firm. It underscores the ever-evolving and complex regulatory environment in the cryptocurrency industry. Understanding the regulatory landscape is essential for any cryptocurrency investor. In closing, I encourage you to absorb these insights, not just as passive observers but as active participants in your financial journey. The world of economics, cryptocurrency, and traditional assets is a dynamic and ever-evolving one. By staying informed, playing the probabilities, and exercising discipline, you can make informed decisions that safeguard your financial future. Leave a comment below and share your thoughts. How do you see the current economic landscape, and what actions do you believe are necessary to protect your financial interests? Disclaimer: the information provided in this speech is for informational purposes only and does not constitute financial advice. It is essential to conduct thorough research and consult with financial professionals before making investment decisions.
Before you go, help us by smashing that YouTube like button. And subscribe to this channel, so you won't miss any of our videos. This shows YouTube algorithm that you value our information. And it helps us spread the message. Sharing is caring.